So I'm going to talk about an issue which I think is very important for the crowd today. And that issue is what regulators are thinking about cryptocurrencies and ICOs in particular. This is a very exciting area. It's constantly shifting. There's been a lot of work done by regulators, certainly a lot of work done by the Monetary Authority of Singapore here. And I think it is a transitional period. There will be more and more regulations coming up. The shape and form of regulation is something that we are not certain at this stage. And it largely depends on how the industry evolves. So I'm going to take you on a snapshot of what the changes are and what I think are the drivers for regulatory changes going forward, right? Let's move on, and I hope this clicker works. Okay. This is Ravi Menon. He is the Managing Director of the Monetary Authority of Singapore. This was a fintech festival that took place 2 years ago, but I think the message is relevant. The message here on this slide is that regulations cannot front-run innovation. It cannot be ahead of innovation. And he promised that regulators must run alongside innovation. And here is where there is a correlation between regulation and innovation. So Ravi Menon says that if there is regulations, it must be risk-focused. In other words, regulations must identify the specific risks that it wants to address. It must be proportionate. So you can't have very heavy-handed regulations addressing a relatively small risk. But this is a very important policy statement made by the MAS 2 years ago, which I think is very relevant. Now, last year was the year of cryptos and ICOs. And this is the Deputy Prime Minister of Singapore, Mr. Tharman Shanmugaratnam. He's also chairman of the MAS. There was a question in Parliament asked of him, what is MAS doing about cryptocurrencies? Is MAS going to ban cryptocurrencies? And he said this, he said that the first point that he acknowledges that cryptos are an experiment. It is an experiment. And that they are looking to understand the full implications of cryptos. It is still early to regulate, right? So the MAS is watching and seeing. His point is there is no strong case to ban cryptos in Singapore. So they acknowledge the value that innovation can have for cryptocurrencies, because some of these innovations could turn out to be economically or socially useful, but at the same time, they are also aware of the risks. So it's a very carefully nuanced statement. Yes, they appreciate the value cryptocurrencies can bring. In fact, in Singapore, the MAS is spearheading a project called Project Ubin, where the MAS is coming up with a Singapore dollar coin to facilitate interbank settlements. They've also formed an R&D center with MIT, the US college, and one of the key areas of focus is actually cryptography, and this was announced by the MAS. So they buy it, and I think regulations may or may not shift. So I'll talk more about how regulations have shifted in Singapore. Now, on ICOs, and this is an area that we've been very directly involved in, we actually engage with the MAS in shaping the regulations on ICOs in Singapore. The position is, I think, a very balanced one. So the position taken by the MAS, the key question is whether the tokens are securities. If they are securities, they are subject to the existing laws contained in the Securities and Futures Act. If they are not securities, they are not regulated. There are only two expectations from the MAS for ICOs that are not securities. Whether you call it a utility token or access token is substance over form. So they will look at whether the tokens are securities, and then you need to have a legal opinion that the tokens are not securities, and two, you need to put in place a set of anti-money laundering and KYC framework. So that's the position, and because of this clarity, I think it has helped develop Singapore as an ICO center in the world, right? And how the MAS defines securities is contained in the Securities and Futures Act. In the red bucket, so securities is defined as either an equity or a share. So if your tokens give fractional ownership or control, it would be a security. If it's a debt instrument or a debenture, so if you have a debt arrangement where you agree to pay a coupon or interest or a dividend, it will be a security. If it's a collective investment scheme, like a fund, where there is a manager that pools investments, invest it in underlying assets, and then return the investment gains to investors, there would also be a security. Now, if you have securities, it doesn't mean that you can't do an ICO. You can. But it means that you're subject to the prospectus requirements for retail offers unless you fall within one of the exemptions. One of the practical exemptions is an offer to accredited investors, rich people. You can offer securities to accredited investors very legally without a prospectus. Okay, and I think going forward we might see more and more securities offerings, especially as more and more platforms for securities exchanges come up. Because right now the handicap is if you want to do a securities token, where are you going to list it? Because as far as we know, there aren't any securities exchanges approved in Asia to list securities tokens, but that might change. I'll talk about that in a bit. Now, if it's a utility token, what you're doing is pre-selling services. It is not regulated. It's just like Kickstarter when you crowdsource to fund a new watch, but now you're funding services. Of course, the difference is that the offer is tokenized, so you can sell it to other people and it'll be listed on the exchange. Revenue sharing, I put it there because it is not clear whether it's a security. It is unclear from Singapore's regulation. But my view is that it makes it closer to the securities line, okay? Now, these are new developments. The first is that the MES has announced that it will regulate cryptocurrency exchanges in the Payment Services Bill. Now, this is very interesting because it means that the regulators are treating cryptocurrency exchanges like conventional financial services. It will be subject to licensing, capital requirements, fit and proper TRM, as Saifan has mentioned. The MES has also issued a consultation paper to facilitate securities tokens exchange. It will be called a recognized market operator. It's an existing regime, but what they have done is to make it easier for a startup to start a securities token exchange. And this is a fantastic opportunity because I think going forward there'll be more and more securities token offerings. Securities exchanges will be very, very relevant because that's the only thing that is stopping securities token offerings from happening. Now, just a little bit of crystal ball glazing. Right now, if you look at ICO regulations, there are 3 buckets, right? This is the restrictive buckets, pragmatic and measured, and permissive. Tier 1, where ICOs are banned, places like South Korea and China, clearly restrictive, right? Tier 2 would be places where they're not technically banned, but regulators have taken a very stern view about ICO regulations. The India, the US, Switzerland to some extent, because I think the FINMA guidelines do make it a little bit more restrictive. Malaysia is interesting because technically they have the same laws, or very similar laws to Singapore, but the regulatory approach is quite different. Pragmatic measured, Singapore, Hong Kong, Australia, there are other jurisdictions there as well. Permissive, I'm not going to go there because you really don't want to go there, right? Now, what are 3 scenarios of ICO regulations going forward? The first is the doomsday scenario. Now, this is bad for everyone because in this scenario, there is an outright ban on ICOs. It drives everything underground. The players are opportunists, scamsters, fraudsters, and legitimate businesses are denied a funding opportunity because fundamentally an ICO is an efficient way of fundraising for enterprises. It's a great thing if done properly, but this is the doomsday scenario, which we hope will never happen. What's the next scenario? Heavy regulations. ICO regulations come up, but they mimic or they mirror securities regulations, which to me is problematic because securities regulations were drafted a long time ago. In the US, it was drafted in 1933, 1934. In Singapore, it was, it's been around for many, many years, decades. And it was drafted at a point in time which is very different from the world that we live in right now, where access to information is probably more restrictive. The arguments for information asymmetry is probably greater. And probably we don't have a well-educated investor community as we do right now. So it's problematic if the ICO regulations mirror securities regulations and impose things like prospectus requirements. In this scenario, there'll be a limited number of ICOs because the issuers tend to be bigger companies which can afford the processes to issue prospectuses, and startups and smaller companies will lose out in this scenario too. Scenario 3 is where we want to get to, right? Balanced and sensible regulations. Look, we can't avoid regulations because they exist for good reasons. They are there to protect the interests or to find a balance in protecting the interests of issuers compared to investors. There is still some information asymmetry. When you launch an ICO, the investor will ask or needs to be assured that you are making correct, or you're not making any false claims in your white paper, or you're not making claims that you cannot execute, or worse still, you're not making any fraudulent claims or misleading claims. So here, the regulators will work with the industry on self-regulatory mechanisms. I think there are a couple of industry initiatives to put in best practices for ICOs that's happening. We want to see healthy and responsible ICOs. And we want to see a whole spectrum of companies, startups, established companies, listed companies. You know, I had a chat with a client the other day, and we think that maybe one scenario is that you might see some of the big companies that exist doing an ICO. They might be the likes of a big transport sharing company that might find it value to issue their own tokens. So there might be a new phenomena happening. And from the investor community, they will see ICOs as an alternative investment class, which I think is also great, because with ICOs, investors are able to invest directly in early stage companies. Whereas in the past, I have to park my money with a VC fund to invest in early stage companies. So what are the key drivers on scenario 1, scenario 2, scenario 3? I think issuer responsibility. The more ICO issuers behave themselves, the better it is. Proper disclosures in the white paper, addressing issues like conflicts of interest, delivery or execution of promises in the white paper, responsible usage of funds. Of course, investor complaints, whether these exist. Moving on, the clicker doesn't seem to want to cooperate. Frauds or scams, market abuse in exchanges, which is largely unregulated in most jurisdictions, right? And you know, for securities exchanges that are regulated, there are very strict rules against things like market rigging, market manipulation, insider trading. But I think in most exchanges, there might not be similar rules. It is important for regulators to understand the mechanics and the value that ICOs can bring to enterprises, because it benefits the general economy as a whole. And lastly, self-regulatory mechanisms, right? Now, in the meantime, I thought it's useful to share this. This is an article, regulators are slowly starting to get it. Utility tokens are real, right? This is, I can't remember the publication on this, but this is fairly recent. Swapnendu Mohanty is the Chief FinTech Officer of MES, and he said this: I want to quash this false narrative that's been going around for the past 2 years that you can separate blockchain from crypto. You can't. I think they're very inherently intertwined. So this is an interesting observation by the Chief FinTech Officer of the MES. Cryptos are an integral part of the blockchain, right? Moving on. These are some possible regulatory areas of focus. He says that he sees 6 or so of the world's more important regulators coming together, having some broad agreement on utility tokens, and what distinguishes them from payment and security vehicles. For example, he says there's a need to address pressing concerns about what level of platform functionality and when a token must have to be exempt, to be an exempt utility status. Now, this is an issue because in places like the US and Switzerland, they require that before you issue in order to issue a utility token, you must have a ready platform. If you don't have a ready platform, then it's not a utility token, it's a security. In Singapore, that is strictly speaking not required from Singapore laws. So there's a bit of a disparate or different approach in different jurisdictions. So this is an important issue. The other issue that he talked about is consumer protection laws. How do you account when ICO issuers don't deliver? They run away with their money. They use it to buy a Lamborghini, right? Or in Singapore, you have a Sentosa Cove house. Those are very real concerns, right? But interestingly, we are seeing industry innovation. Some ICO issuers actually get audits to be done on the receipt of funds, or they use escrow arrangements. But I think we have reached a stage where, look, the ICO thing really exploded in the second half of last year, at least in Singapore. But 6 months down the road, I think, or 9 months down the road, I think it is a very different ICO environment right now. Investors are getting more and more demanding. They're asking harder questions. We find that in fundraising, more and more ICO issuers are relying on private sales. So if you're raising 30 million, you're going to raise like 25 in private sale and maybe 5 in the public sale. So that's an evolution. So the role of the bigger whales are becoming more and more critical. But I think going forward also, you will find more securities tokens taking place, because for a securities token, the proposition is very clear, right? You can pay dividends, you can have revenue sharing arrangements, you can have asset-backed arrangements. So the value proposition to an investor is more real. Of course, there's still a place and time for utility tokens because people should still be allowed to pre-sell their services. I think it's perfectly legitimate. So that's the place where we're at. I think watch this space. I think there might be more regulations coming up, but I think it's important for this community to have that ongoing conversations with the regulators amongst yourselves, and let's try to do our bit to promote good ICOs or good usage of blockchain and cryptos. So with that, I thank you very much for your attention.